Now let us move on to goods and service tax. Namaskaram students. Today we are going to learn about goods and service tax. What is GST? In short we call it as GST. First I will give you the introduction about the goods and service tax. Let me have an introduction. Goods and service tax. What is this? It is a consumption based tax and it is levied on sale, manufacture and consumption on goods, and not only goods and also the services at a national level. So this tax will be substitute for all indirect tax. It is levied by the state government and also the central government. State government will levy SGST and central government will levy CGST. So let us see what are all the subdivisions of this goods and service tax. Let us see. This G represents goods, S represents service, T represents tax. This act was passed in the year 29th March 2000. In the year 2000. 29th March 2017, but it will come into the effect only on 1st July 2017. And this is a supply of goods, where the supply of goods will be taken. In that place only we are going to remit the tax, and it is a multi-staged destination based tax, and also it is value addition. So let me explain one by one about this. First let us take the value addition. This is value addition means manufacturer. Who, see here, this is an example, a manufacturer who makes the biscuit. You can take a biscuit manufacturing company who makes the biscuit by flour and also the sugar, isn't it, and other materials also. So the value of input is increasing, isn't it? So when the sugar and flour are mixed, and what will happen? It will bake into the, so many processes will move on and it will make into the biscuit. Then the manufacturer sell these biscuits to the one, or else he will sell the biscuits to the warehouse, isn't it? Warehouse only they will label it, or else warehouse agent who packs the materials in the large quantities of biscuit. So into small labels, we want to put the label, isn't it? So this, all these addition, here also they will charge the tax, value addition. And after that he is making as a biscuit. At the stage he wants to pay the tax, and also in that, after that he is going to make it as a biscuit, isn't it? After this the warehousing agent, that he wants to sell it to the warehousing agent. In that stage also he wants to pay the tax, that is value addition. Then what the warehousing agent will do, he will sell it to the retailer. He will sell it to the retailer. Retailer fully packed materials. So the retailer, he will do packages, pack the biscuits into smaller quantity, and then what will happen? It will invest in the market in the biscuit. So this is each and every stage the increase in the value, isn't it? So each and every stage there is a GST is levied on this value addition. So each and every stage value is added, monetary value is added. So each stage to achieve the final sale to the end consumer. So each and every stage, here also the value added. So we are paying the value addition. Then after getting the raw material to make it as a biscuit, we have to add the value addition. And after that, making as a biscuit, we have to label it and we have to send it to the warehouse. That we are adding the value. So each and every stage we are paying the tax. So this is the introduction. Before the GST regime was announced, what was prevailing? So before the GST was announced, came into the existence, existence. See, the manufacturer want to buy the raw material. In that time, at that time he wants to pay the tax, and then he manufacturer want to sell to the wholesaler. At the time also he wants to pay the tax. Again the wholesaler want to sell the goods to the retailer. Again he wants to pay the tax. He will add some value tax, and then the retailer want to receive the goods from the wholesaler. So manufacturer sell the goods to the retailer by adding tax, and then retailer purchase the goods from the wholesaler. In that stage also manufacturer tax and also wholesaler tax, both the tax will add in the head of retailer. So manufacturer whatever he will pay the tax, and the wholesaler also paid the tax. Retailer tax, these 3% tax will be added to the retailer, and all these persons tax, finally the consumer also going to get the tax. Final end consumer is not going to claim anywhere. Anyhow, whatever, see for example 200 rupees manufacturer is getting the raw material. So by adding tax, for example you can take 10% tax, example only I am telling. So 10% tax he is going to sell to the wholesaler by 210 rupees. The wholesaler again he is going to have 10%. 10% means what is the amount? 10. 220 he is going to sell to the retailer. At last retailer sell the goods to the, again he will give 10%. 10% means 20 rupees, 240 rupees, isn't it? So at last retailer sell the goods to the consumer finally at 240 rupees. So here 200, the cost of the goods is 200. So while crossing all these stage, for the end consumer, how much we are paying for the goods before the regime of GST? 40 rupees extra. For example, I am telling. So to avoid this cascading effect, this GST was coming to the existence. Let us see what is meant by supply of goods, what is meant by multi-stage tax, what is meant by destination level, and the next one is what is meant by input tax liability. What is meant by input tax liability? Let us see one by one about this. Next we are going to see about what is GST. We are going to, so far we have discussed only the introduction. Now only we are going to enter into the GST topic. In India, tax system can be broadly classified into two. One is direct tax and another one is indirect tax, isn't it? So direct taxes which are imposed on individual and paid to the government directly by them. On the other hand, indirect taxes is imposed on goods and service tax paid indirectly to the government by the individuals. That is indirect tax. For example, taxes which paid on bills of restaurant. We are paying the restaurant bill. We can take, that is the indirect tax. Indirectly we are paying the tax by paying the restaurant bill. In that restaurant bill, the tax will be included. That will be paid by the individual. Indirectly we are paying the tax. See, for example, direct taxes means income tax through our income. From our income we are going to pay the directly to the government. We are going to pay the tax to the government directly. Then nobody can pay instead of us. Then corporation tax, that also property tax, our property, it is in our name, so we have to pay the tax. Wealth tax, wealth also it is accumulated in our name, that we should not impose others to pay the tax instead of you. Gift tax, everything is a direct tax, it is paid only by the individual to the government, directly to the individual to the government. Here indirect tax, it is imposed indirectly to the government by the individuals. Then for example, already I have told you, which paid on bills of restaurant, and we are paying the movie ticket. For paying the movie ticket, So these are all the things we can take for example. And we are going for the hotel. For that we are paying the money. So in that everything will come under the indirect tax. So moreover, all the commodity which is purchased by an individual, everything indirect taxes is basically levied by central government. Who is levying the tax? The central government and state government. The central government is levying excise duty, service tax, central sales tax, customs duty. And then state government is levying value added tax, entertainment tax, luxury tax, octroi and entry tax. Let me explain about each and every one. While central government is levying all these taxes, isn't it? So excise duty which is charged on goods manufactured in India, on manufacturing. When they are charging during the time of manufacturing, we are paying the excise duty. When we want to purchase the raw material, the manufacturer want to pay the excise duty and then purchase the raw material. Service duty, service tax also, which is charged on services by the individuals. Services by individuals. Then central sales tax, that is CST, is charged on interstate of sale. Then customs duty, if you want to, it is charged on the import and export of goods. Already in the warehouse we have seen the bonded warehouse. If you want to get the goods, we have to pay the customs duty. So for import and export of goods, we have to pay the customs duty, and we have to deliver the goods, and we have to send the goods. These are all the taxes levied by central government. Then on the other hand, the taxes which are levied by state government is value added tax. It is charged on the goods which is sold within the state. Entertainment tax, that we are going for the movie, isn't it? So it is charged on various forms of entertainment, all the parks, so various forms of entertainment. Luxury tax we are paying in the items such as luxury hotel rooms. We are going and booking the 5-star hotel. So luxury hotel rooms. Then octroi and entry taxes, that is also imposed on transfer or entry of goods. If we want to transfer the goods to one country to other country, we have to pay the octroi and entry. If we want to other country goods, we enter into our country, that also transfer or entry of other goods. We have to pay these taxes. So these are all the indirect taxes such as entertainment tax, octroi duty. These are all the things were levied by the state government and state and center. So these lead to the lot of overlapping of taxes levied by the both the state government and also the central government. So it lead to what? Already paid tax, isn't it? Already taxed goods, again we are paying the tax and then we are getting the goods. So tax on tax, that will lead to it is known as called as a cascading effect. So already the goods levied by tax, again we are adding the tax and getting the goods. So that is called tax on tax effect. It is known as cascading effect of taxes. So to avoid these things, so now let us understand the name. What is to eradicate all these kinds of tax, The central government will levy CGST and the state government levy the tax SGST and also IGST, interstate tax. So these three taxes will avoid all these kinds of taxes. So as the name suggests, in one country, one tax. So what is the tax? These all the indirect taxes are levied on goods and services, which clears the GST, that is the indirect taxes. It is not going to have any impact on state or rate or structure of direct taxes. So here this indirect taxes is not going to have an impact on the direct taxes. So these taxes such as service tax, luxury tax, all these kinds of taxes will be replaced. All these taxes will be replaced by CGST. All these tax together only one tax, that is it is replaced by CGST, Central Goods and Services. And all these value added tax, entertainment tax, luxury tax, octroi duty, all these tax will be replaced by state goods and services. So and then IGST also. So integrated goods and services. Interstate tax. Interstate means what? Intrastate means what? IGST means what? Everything we are going to know one by the example. Now let me explain about all these CGST, SGST and also IGST with example. Then central government indirect taxes are replaced by what? CGST. State government indirect taxes was replaced by SGST. So before GST, what was the prevailing tax? All these tax will be replaced by this one. So before GST was came into existence, it coming to India, which states are used GST? It was applicable on many countries such as Australia, Japan, Pakistan. GST also applicable in Pakistan. Pakistan also they have followed the GST. So now we are going to discuss the rates of GST on goods. What is the rates of goods and what is the rate of what are all the goods, how many percentage GST we are paying, and then what are all the goods are exempted on GST, and what are all the services rate. Goods also we are going to see, services rates also we are going to see. Now we are going to see the slab rate. Before that, let us have a journey of GST in India. GST committee was set up in the year 2000. After 17 years, it was coming to the existence. The bill was passed in the year in Lok Sabha and Rajya Sabha, and when we come into the enforcement in India, it will take 17 years to come into India. So this is how the journey of GST in India. Now let us have a slab rate for GST. See, the government has categorized various items. 1211 items was categorized by the government for various items in GST slab rate. So for goods separate slab rate and services separate slab rates they have given. So for essential items such as milk, salt, eggs, all the food grains, for all the essential items 0% GST. So how many percent GST they are levying? 0% GST was levied by the government. Then 5% was tax was collected for the commonly used items such as coffee, species, rusk, bread, cream, all these etc. items. And then 12% to 18% for, that is 2 standard rate of GST. See, if you want to purchase, the manufacturer want to purchase any goods from the raw materials, means if any wholesaler want to purchase any raw material from the manufacturer, means he wants to pay rupees 18%. Depending upon the central or state, the rate will vary. Then 28%, this is the highest rate. This rate is luxury items. This is the highest rate which will be applicable on luxury items like fridge, AC, beverages, car. These items 28% we have to pay the tax, GST. Then come to service slab rate. So 5% for transport of goods. Transport of goods such as by rail or road, air transport or ship transport, and tour operator, and printing media, and then newspaper printing. So for them they are charging 5% service tax. Transport and also newspaper printing. 12% for air travel, for the business class air travel alone. So 12% air travel, business class people. Business class means they are going a highly sophisticated air travel. So non-AC restaurant, hotel rooms, and then construction of building also we have to pay 12% GST. All the building materials if you want to purchase any, if you are going to construct a house, if you want to build, buy a bricks or any iron rod, everything we have to pay 12% interest. Then 18% interest for general rate, that is on all the services. No specific, that is for foods, any drinks, AC restaurant, bar, outdoor catering. If you want to make a composite supply, and then if you want to make pandal, for that 18% GST want to collect. Then 28% for race, club and 5-star hotel. Gambling, sports event, the hotel rent more than 5,000 rupees for 5-star per day, more than 5,000 rupees. That kind of 5-star hotel, we have to pay 28% of service tax. Service tax want to pay. That is GST, goods and service tax want to pay. So this is all about slab rate. Next, let us move on to that. What are all the destination and what is the origin, where it was GST, what is the threshold of GST. Everything point by point we are going to see. What is the advantages of GST, what is the destination board, everything we are going to see in the next